Hi, students and learners. My name is Arman. I'm teaching Diploma of Accounting at Wynn College. Welcome. I'd like to speak about a unit. It's called Manage Budget and Forecast. Also, the unit code is FNS ACC 513, as you can see. Why this unit is part of your qualification. I'd like to start with an example through. And imagine that you're setting up your small business. For example, like gardening, like cleaning, any business you name it. When you want to start your business from scratch, you have to buy some equipment, of course. So, you have some alternatives to supply funds. You might have money from your own pocket. You need to get loan, or you have to find another investor. Well, if you have your money from your own pocket, then good luck. But if you need to get loan, or you need to find another investor, you need to convince them to give you funds. To do so, you need to show them your budget plan and budget reports. So, you need to show them how much is your sale, well, quarterly or annually or even sometimes weekly, and also you need to show them relevant expenses. So, if you have the good one, you can easily convince them. If you go to bank, the first thing they will ask you, alright, where is your budget report? If you go and talk to an investor, they will ask you, okay, it's good, your plan is perfect. So, based on what exactly you're talking about. So, budget report is the best thing. Now, we have some sections that we need to cover, and also we have some examples that are prepared for you guys. Now, the first section is prepare budgets. The first things you need to know about is what is your budget objectives, your goals, what goals you exactly looking for, and what goals and target you have to achieve. You need to demonstrate these objects through to your budget reports and maintenance of the budget reports. So, the second thing you need to work on that is that you need to define cash. You need to define how much cash inflow you need. And also you need to find what is your revenue and your cost of goods sold and also your expenses. And according to that one, if you're able to break down these items through to your reports, you can forecast them, you can control them, you can monitor them, and also you can review. And if you need any changes, you can apply that changes through to that one. So, the second item we need to work on that is forecast estimates. In order to do the forecast, we need to establish some assumptions and parameters. We need to see based on what exactly items and assumptions you are going to establish it. Based on what, technically? You're going to sell? How much is your sell? Who you can sell? Quarterly, monthly, semi-annually, annually. So, you need to make sure that if you are saying that I'm selling that amount of money, it must be realistic. Well, of course, in between, you might have some up and down. sometimes you get more sales, sometimes you get less sales, of course, but you need to be realistic. You need to also identify financial risks through your operation. Have you identified? Have you identified your scopes of your operations? And through to that, each scope, did you find a risk? So, did you find how severe are they? Did you measure them? And if you found some risks are quite high, do you have any strategy to protect them? This is your business. And according to your business, you are doing estimation. So, what sort of policy and procedures you already provided and or created in order to prevent and protect yourself from risk? So, the third item that we are going to talk about is your presentation of data. How would you be able, and what standard you are following as Australian Accounting Standard Board, that everybody will understand and you can show them everywhere. So, you need to have a clear format. Look at this format, for example. It's one of the standards formats that you are using it. It's got letterhead, company name, the date, exactly you are looking for your reports. You itemize it. It's got budget, actual, variances, and favorable or unfavorable. You need to follow the proper standards. It's a language true to all accountants. If you don't follow it, people, they don't understand it in finance section. Now, then you have to complete your report. When you complete your report, you are going to have accurate data. And you are able to compare your project through to market. Well, your market might have like some inflations. You need to find out if in market you have some growth. You need to find out. Maybe your project, the value and worth of your project is dropping. You have to find out. So, you need to prepare all these documents. Why? That's the question. It's very simple. For your managers, for all stakeholders, internally, externally. Because your report is a signal and indicators to other managers what's going on. Now, if you have a look on this scenario, it's a scenario. I try to put all numbers in there, but and it's kind of a report for you guys, very simplified, not really complicated. That's the easy one, but it's always like that. Yeah, sometimes you will see an Excel format budget, very complicated and very scary. But don't worry guys, because that's the concept. The concept is that before a financial year, for example 2020, next year. So we need to create a budget report. We need to forecast, as already mentioned. For example, this report is for September 2020. What could be, guys, as I already mentioned, that it could be like weekly, monthly, quarterly, semi-annually, annually. Depends on what you need, what's your requirements, plus policy and procedures. If policy and procedures says, well, you have to prepare this report monthly, then you must prepare monthly. If it's quarterly, quarterly. It's important about your financial transactions. How many financial transactions you have during year, during month. Which month is the most important? Which month is the lowest transactions you have? That's the example. Only an example, simple example. So we already don't have a look on this section. We have these only sections. We estimated a budget report. Imagine the gardening business, okay? Simple. We thought and we estimated based on our parameters and data that we have that by end of September, during September, you are going to have like $100,000 sales. Well, different sales, it doesn't matter what, in total. And expenses, we have wage, $35,000, materials, $10,000, cost of vehicle, $5,000, and other expenses, $3,000, such as mobile rent and other expenses, insurance and other expenses. The total would be, difference would be like $47,000 profit. This is what you are going to bank and tell them, hey, this is the amount of profit that I'm making per year. Now, we're going to log, this is the forecast section. And that's the documentation that we are trying to put our budget in there. Now, by end of September, you collected all your data and put it to these sections as an actual. What is an actual is that the real amount of money you made or you paid as your costs to run your business. We can see that here your sales was $120,000, not exactly the amount that you forecast. It could be $90,000. It could be $150,000. It's important, it's very important that you have an accurate number. If you don't have an accurate number, your report is wrong for sure. Other items, your wages has raised to $40,000, not $35,000 as you predicted. Also, your material is $9,000. You already forecasted $10,000. Your vehicle cost, it turned to be like $4,000, not $5,000. And other costs is turned to be like $4,000. The difference between total expenses and your sales is $63,000 as your net profit. Now, if you go to the last section, which is called Monitor Budget Outcomes, it's our time to analyze. To do so, we need to analyze budget variances, and then we need to review budget process and we implement any changes as required. Okay, that's done. Alright, now we came to the point that you have your budget ready, and it's end of September, you receive all your documentations and all your receipts, you posted through data entry, and now how much is your actual sale? It says 120, your wage is $40,000, your materials $9,000, vehicle it says $4,000, other expenses $4,000, and the difference between the total expense and sale is $63,000. Obviously, it's positive, it means that you made profits out of that. But now, the last section that we need to talk about is analyzing. Analyzing and review budget process. And also, if you find any changes in the future, you need to apply through to your budget reports. Now, when we go through to like analyzing, what exactly we are trying to analyze and why we are doing that. Analyzing would be the difference between budgets, or we call it benchmarks, with actual data. We need to find variances, and we can calculate also based on percentage. And the last section would be, we need to say that, is that favorable or unfavorable? Now, why we are doing variances processing? It's got a very simple answer. It is an indicator to us that are we following our budget? Are we getting over budget? How much cost we are spending our project? And even though, are we selling enough based on what we predicted or not? It's very effective. It's one of an effective indicators to your processing and your operation of your business. Now, how to calculate variances? It's very simple. Budget as a benchmark minus actual. Look at these sections. Budget minus, which is $100,000, minus actual, which is $120,000, is $20,000. Let's go to expense. $35,000 was predicted, and what is your actual wage is $40,000. The difference is minus $5,000, obviously. Here in material, you predicted $10,000 is your cost to run your business during September term. But how much is that? Your actual cost of materials is $9,000, which is positive $1,000. We apply through to each account one by one. That's the secret. So yes, when you go through like a proper profit and loss statement, if you go through to all accounts, you might have so many accounts, but the secret is that you apply this variance formula, which is very simple. You apply to each account. And you can see that the variances between what you, at the end of the story, what you budget or what you predicted and what you gain as an actual is $16,000 positive. Now, this section, it shows you calculate variances based on percentage. It's got very simple formula. Benchmark minus actual divided over actual. That's the formula. Easy, simple. And you can see that. This is 16.66%. That's the difference. This amount of money. You got $5,000 here, which you already got over budget, you paid more according to what you predicted, and the difference is 12%, 50. In this case, in for material, you can see that your save is 11.11. And the other case you can apply. You can see that for unit profit, you have 24, positive 24%.39. And the last section that you are indicating that are you getting positive out of your transactions or you are getting over budget. The formula is very simple. If your actual, in your sales section, you made more money than what you predicted, is favorable, and you put F. If your expenses, it was more than what you predicted, it's unfavorable. Look at these sections. Minus 12.5% and it's unfavorable. You apply these rules to all sections. And you can see that at the end, the total section, you got favorable as a net profit because it's positive. So, this is analyzing and it's showing you and indicating so many information. Why? Because you need to get this information to make reports, and after that your managers or even yourself, you have to analyze it. You have to think about it. You need to review your process. If you're getting unfavorable at the end, so you have to think twice. What's your operation? Which area you're making mistakes? You need to go and review this area why you are getting unfavorable. Why your wage is getting $5,000 more than what you predicted, even though when you predicted, you consider all parameters in there. It is about this unit, and hope you liked it, hope you learned some information about that. Please come and see me if you have any further information. Thank you so much. Yeah. Now, to successfully pass your unit, it's called Manage Budget and Forecast. You got 5 assessment tasks. Don't get panicked, it's so easy. Assessment task 1 is question and answer. Very simple questions, and you provide answers. You can type underneath of each question and save your file and submit to us. You can even just do handwriting and give it to us. Doesn't matter. The second assessment task is analyzing and calculation. Very simple, same as what you have here. Some calculation analysis. They give it to you. You provide answers according to the secret I told you. You analyze, and then you provide answers. You save your file, and then you submit to us. It's very easy. Assessment task 3. It's according to a case study. The case study is called Alpha Tile Pty Ltd. We provide you case study, and then you read. It's got some questions. You only need to cover the theoretical part. You attend to meeting and interview, exactly same as what's happening at workplace. All managers are sitting together, they have meeting minutes, they're taking notes, and also they provide answers to each person's questions. Very simple. You provide answers. Assessment task 4 is third-party reports. It is a connection between your employer and us. We would like to let them know that you are studying accounting and you're working really hard. Assessment task 5 is exactly the case study from assessment task 3, and then the same questions, but is like a comprehensive report. We call it final report. Exactly same as case study Alpha Tiles Pty Ltd. It's got a couple of sections. First section is an executive summary that you are going to provide some summary about whole case study and what you are doing. Section B is calculation, same as assessment task 2, very similar. Section C is a main body. You need to only provide answers those questions that you've done in assessment task 3. So technically assessment task 3 is your brainstorming. So easy, yeah, isn't it? Then section D is conclusion. You provide conclusion. And section E is recommendation to the case study. Like how you can improve it. For example, you provide us some reason and the best way that you can improve the company. Very simple. And section F is workplace evidences. Very similar to assessment task 4, third party report, including any photo where you're working, if you have pay slip, any kind of evidence that it shows us that you're working, such as email, communication, text. Very simple. And by covering all these sections and all assessment tasks, I would say that congratulations, you completed